Okay, so welcome back to stage 2 here at FinTech Live London 2024. You're really welcome in the room and really welcome online around the world. Good to have your company as well. It's a real pleasure for me to be able to hand over directly to SAP Grow and colleagues on stage for this next panel discussion, shaping the future of B2B payments with digital currencies. So I'm sure they will introduce themselves much better than I, but we have Corny Boersma at SAP Grow, Bernhard Schweitzer, head of SAP Digital Currency Hub at SAP, Ollie Carew, director at FinTech at EY, and James Tromans, head of Web3 at Google Cloud. So Corny, right over to you and your colleagues.
Thank you very much. And I'm privileged to be your moderator for this session, giving some spare time to our previous moderator to grab a coffee. So thank you very much for the introductions. Shaping the future of B2B payments with digital currencies. In essence, it's about diversity in payments. And with that, I have to apologize first for bringing 4 white male people on stage. Next time, we will do this better, and we will bring in that diversity. I think that's what we commonly agreed before we went on stage. Introducing the 3 people next to me very shortly. We have James from Google Cloud, as said. He will bring an industry perspective on these B2B payments in digital currencies. Ollie from EY. I will come to EY specifically related to an article on Bloomberg as part of my introduction as well. And Bernhard, who is a colleague of myself at SAP. But as you might know, SAP is a rather big company, so we rarely do not see each other that much, but glad to have you on stage as well. For those that are very close to the news in FinTech and are watching that on Bloomberg, for example, there has been an article recently about EY receiving payments in digital currencies from PayPal. And also SAP was mentioned in that article as the technology provider. So that's a little bit what we're going to discuss today with the views of the 3 great people next to me. And maybe, Ollie, directly to you. Why does EY receive payments in digital currencies?
Yeah, it's a good question. So B2B payments, for those of you involved in it, B2B payments are painful. Right? I think it's pretty fair to say. So this is something that we deal with at EY, obviously with our clients and others, but also internally. Right? We're a large, complex, global organization. We have to deal in multiple payments, right? Internally, inter-organization, but also with our clients as well. There are lots of challenges we face. In particular, if we think about things like operating cross-border, we have cut-off windows, trying to have transparency over payments as well. Our corporate treasurers have some pretty big headaches that they deal with. And so we're always looking at how we can innovate with our clients, but also with our alliance partners like SAP, and also thinking about what we can do internally. So, not just kind of telling others what to do, but, also practice what you preach. And so one of the things we're exploring is how we could use SAP's Digital Currency Hub to integrate that into our existing treasury solutions to accept digital currency payments. Right? So that's the kind of what we did. Well, why? Because those pain points that we have can be solved by digital currencies. Right? We accepted PayPal stablecoin, but actually I think this goes broader. So this is about having the choice to use digital currencies, whether it's a stablecoin, could be tokenized commercial bank money, it could even be a central bank digital currency if you want at some point, but having that choice and ability to use that where it solves some of the pain points or challenges or issues that we have. So in particular, if we're doing things cross-border where there's an FX involvement, or if there are large sort of time zone windows where we have cutoff points as well, those are some immediate use cases that we, but also I think other corporate treasurers recognize, is a real win in terms of starting to use some of the sort of more enhanced digital payments and currencies that are out there.
Did you get already feedback from other clients in the market saying, hey, we've seen this on Bloomberg, you're accepting stablecoins, we want to join this journey with you and become, let's say, an early adopter in that space?
Yeah, definitely. I think we have, like everyone, right, there's a spectrum of people out there and clients. The same applies to corporate treasurers. They're not all kind of innovators. There are some laggards and adopters, but we've already been seeing pick up in terms of other enterprise size sort of institutions who are saying, well, firstly, why did you do this? How did you do this? And then kind of to your point, okay, how do we start to do this ourselves? I think we'll probably touch on what that means as an organization to get your head around accepting something like a stablecoin payment, not just the technology, but what it means in terms of culture, compliance, upskilling in certain areas as well. But we've seen that uptrend. And I think it's something where if you look at a direction of travel, this is clearly the way that things are moving. I don't think it's going to be right for every single use case, right? But there are certain ones where you can see that there is a real value add to using something, whether, as I say, it's a stable coin or another form of kind of digital money.
Thank you. James, over to you. What's Google's approach when it comes to digital currencies, and how do you see that today from Google Cloud, I have to say?
Yeah, well, I mean, Google Cloud is one of the world's largest hyperscale cloud providers. We specialize in offering infrastructure. In the Web3 space, we've been building products and engineering capabilities for years now, and that's given us the privilege of seeing how the technology in the public blockchain space has evolved from zero-knowledge proofs and privacy-preserving technologies through to throughput and scalability, which is also related. And I think, much like what Ollie was saying, we have seen over time an increased appetite from obviously the digital native Web3 businesses themselves, all the way through to large businesses such as PayPal and others who are interested in this space and taking advantages of how they can leverage stablecoins, but ultimately it's really leveraged the performance improvements that these new rails can offer. And I think we are very privileged to be sitting at the center of a lot of the innovation that's been taking place in this space. Many of our customers are building out this technology. We ourselves build first-party products that facilitate the scale-out of Web3 technologies, from indexing blockchain data, including stablecoin payments, through to hosting Ethereum and other blockchain nodes, so that companies who perhaps aren't Web3 native, maybe like an EY or an SAP, could come to us where they already have a contractual arrangement and say, hey, we want to run a node so that we can also have direct access to what's happening on chain. We don't really want to manage it ourselves. Could you help us out with that? And so, yeah, we can do that. And I think what's so interesting is when we talk to the pure digital natives around payments and stablecoins, a lot of it comes down to decentralization and sovereignty and control. And we really respect that, and a lot of the innovations from Web3 have grown from that space. But at the same time, when we talk to the larger corporates and institutions, they're not really buying decentralization as the value. They're buying the technology process improvements. And so our view is, both worlds should continue to flourish and exist, but I think it's right time for the existing system to be able to cherry pick the right technical innovations that have been happening in the public domain and find a way to embed them under the existing regulatory licenses and ways of working that they already have. And as an infrastructure provider, I think we're very, very well placed to help on that journey, whether that's building first-party products that facilitate it directly or creating the right kind of environment where these things can flourish together. So, we are paying very close attention to it, and we're looking forward to seeing how it develops. And directly ourselves, we're experimenting as well.
Yeah. You mentioned improved performance of those networks which run on your infrastructure as a provider. Are there other things where customers are reaching out to Google Cloud and they say, hey, this is what we are looking for, and we expect that from your side?
Yeah, absolutely. I mean, as a company like ours, we obviously want to be customer-led. We obviously do our own innovation, but that innovation is largely inspired by what we're seeing in the market and what our customers are asking for. And so, if we go back, maybe a year or so, our cloud CEO did a keynote where Brian Armstrong was present, and he runs Coinbase, obviously. And we discussed even then, what Google Cloud's role could be in leveraging crypto as a form of payment. So we've been continuing that journey. We've been learning a nice lot of lessons, and Ollie touched on some really interesting points about the educational journey that one has to go on in order to be able to, controllership, finance, the whole thing. It's not just the technical capability, but it's the process capability. And so part of me thinks that that's more about education and less about real change. I think, obviously, if you were to adopt a pure public blockchain where KYC and AML can still be, less clear, how a large company, especially financial regulated business, can leverage that for accepting payments. But I think that's just part of the picture, and there's other ways to make this technology relevant. And so our customers are pulling us in that direction for sure, and we're responding.
Thank you. You mentioned technical and processes, brings me to SAP, Bernard. What was SAP's motivation to develop an infrastructure facilitating payments in digital currencies?
The process is a good starting point, and actually I would like to lead the discussion more towards what are the needs of our clients, and I would say B2B payments are ripe for disruption with digital currencies. Why? If we look into today's world, payments are slow, especially if they go cross-border, they are expensive, and I have cut-off times. And these are basically the three things that our clients quoted to us when we started that endeavor. It was actually a mid-sized client with whom we did discuss whether he should use a new form of money, and basically we have thrown in just, why don't you use Bitcoin? He said, oh, I don't like it. It's kind of grayish, it's fluctuating, it's probably not a good means of exchange. But when we dived a little bit deeper and explained to him the benefits of digital currencies, namely 24/7 instant settlement globally without any cut-off times, and that at low fees, that was very appealing to him. So stablecoins, we believe, are a choice, or commercial bank money tokens, whatever the customer wants to go. So it's really about that notion of having that notion of instant payments, 24/7, no cut-off times globally at reasonable fees. Now, why does that matter? Let's take two customer examples. The one, a small customer. That small customer basically was selling software on a perpetual license model, ticket size is some 50,000 euro. Now he wants to change his business, wants to move to a subscription model, monthly payments 500 euro. And he basically showed us the banking fee 20 euro. It's not sustainable if I pay 4% just for money movement. So that client was particularly interested in changing the way how his clients pay him. And we all know if we go on blockchain rails, we are instant. So we don't have that improved, we have an improved working capital management position, one, and two, if I go on Polygon, it's probably a fraction of a cent the fee. So this was the one use case. The other use case was more from a large corporate. They said, if I do an M&A transaction on a Saturday, how can I move money quickly from, let's say, Middle East to Europe or Latin America to the States? Or if I deliver an expensive good on a Saturday and I want to get the money into the book. So that notion of speed, closing outside banking hours, plus an attractive cost position, we believe is key. Now, if we take that one step further, I think we discussed a lot about technology, and I think all three of us are believers that the future of digital money will come sooner rather than later. Now, what we would like to do is we would like to support our clients on their growth journey, enabling all kinds of payments. But it's the traditional rail. I think it's probably still 90–95% you go on traditional rails. There's nothing wrong with it, especially in Europe with the SEPA mandate. All great, but then you have those cases where you want to have the more modern rails, be it commercial bank money tokens or be it stable coins, whatever your use case is. And basically, with our Grow with SAP product, we tightly enable that. So you basically decide with which business partner you want to settle on which rail, and the rest happens magically behind the scenes. So this basically was how that project started.
You mentioned magic. I think we want to learn a little bit more. Diving into market segments, because you mentioned small companies. SAP is well known for large enterprises that we serve. And by the way, 80% of our customers are small and medium enterprises. Where would you see let's say, the next adoption of B2B payments in digital currencies?
We will see it in companies doing cross-border payments. I think this is the sweet spot. And then it's basically large enterprises paying their smaller suppliers on a very fast and efficient rail. So this is basically where we will see the first adoption. And then also, of course, amongst large enterprises, like we have showcased with PayPal and EY taking the payment in a tightly integrated fashion. I think key is that the large enterprises don't need to change their processes for the small enterprises to enjoy the benefits of fast and cheap cross-border payments. And then looking a little bit into the future, we also see, of course, new use cases, machine-to-machine payments. I think this is something where I'm almost certain that Google is, we didn't discuss that before, but where you're certainly also looking into. I think this is quite appealing. So if I take my car, go into a garage, license plate is scanned today, I need to basically enter my credit card details somewhere. I don't anytime want to do that. Why don't I put just 10 euro equivalent or British pound equivalent stable coins in a wallet in the car, passing through the garage and basically getting automatically deducted? So those kind of scenarios are appealing scenarios that we see, or more in the enterprise, large enterprise world, doing business with small enterprises. It's about escrow payments, basically embedded in a smart contract. Today I have rather expensive escrow services. I can only do it for very huge payments, leading to situations, again, where a small, mid-sized client needs to always do an advance payment to a supplier in China, basically locking working capital for 30, 60 days. Now, if I can basically have a smart contract as an escrow service, also with stablecoins, we can solve that problem. So I think there's a multitude of new business opportunities using the programmability, be that now on a commercial bank money token or on a stablecoin, doesn't really matter, but that notion of programmability, I think, will become key for new and advanced business processes.
You mentioned that you don't want to disrupt the business processes for these companies that would use it. Ollie, over to you. When it comes to compliancy as well regulations, what do companies need to consider in that specific area?
Yeah, definitely. And I completely agree on this idea of kind of programmable sort of payments or customer journeys. I also think, we deal in services, but those who deal in goods, you think about the sort of trade finance supply chains and things like that. Wouldn't it be great if you can be sort of paid down at certain points within that journey rather than having to wait till the sort of end of that? And we know how much capital it locks up. Anyway, that's a side note. Very passionate about that one as well. But to your point, okay, so how would a large corporate, large global multinational entity adopt something like stablecoins or commercial bank money tokens? I think, what Bernard sort of touched on, a bit of the magic certainly helps, right? The easier it is to integrate, the more likely it is to happen. I think we get this a lot around why we're not seeing greater adoption, greater uptake. Let's not kid ourselves that there are challenges on the back end in most institutions' IT infrastructure. There are also, as we talked about, kind of operational means and ways of doing things in corporate treasuries and other parts of the business as well. And also you've got cultural elements, right? People just know what they know, and they know how to accept what they know. So I think what we've found, and I think what's really interesting about the kind of SAP's Digital Currency Hub is it's integrated into a tool which is already very familiar with organizations, right? So that's one, it helps. People are familiar with SAP, they're familiar with the systems, they understand that. So integrating it as part of it is a kind of huge advantage. I think there is an element, though, of you need to do a little bit thinking around the compliance side to ensure that they understand, okay, differences maybe between types of payments that they're taking, on and off-ramp side of that as well. Understand, are there any financial risk things we need to consider from a liquidity point if we're splitting some of our pools of liquidity, and non-financial risks as well. But I think for kind of enterprise businesses who aren't issuing the stable coins, that's all manageable. We spend a lot of time advising clients on how to address that risk and compliance, and also just how it can help from a compliance side, right? How you can have audit trails. You can start to actually make lives easier and jobs easier when you're starting to use some of these technologies. I think it's a little different on the regulation side for those issuing. I'm ex-Bank of England, I'm an ex-regulator. One of the things we've seen, right, is the kind of regulations emerging around the issuance of stablecoins. There is a bit of divergence between whether it's the EU. Here in the UK, we even have two different emerging regimes between those sort of systemic issuers and non-systemic, and also in the US. So I think it's more of a challenge for the issuers. Those who are accepting it do obviously need to consider what it means in terms of their own reg requirements, but more of that comes down to things like accounting, tax, and everything else. So I would say the work that SAP have done, the kind of general trend we see of trying to integrate these into existing solutions, that addresses a huge chunk of the sort of challenges that you may face. That's not saying there aren't things that organizations need to do and change to adapt, but it does help lower that barrier in terms of making the adoption happen.
Thank you. Back to technology, James. Bernard mentioned the machine-to-machine kind of situations or scenarios. From your point of view or input from customers that you have, do you see other use cases where this, let's say, B2B payments in digital currencies becomes relevant?
Sure, yeah. I mean, I think from my point of view, money is just bits and bytes on a ledger, right? Since we moved to fractional banking at least. And so with that in mind, we're very well suited to deal with moving data around and thinking about the use cases that data can support. And so if money is data and we're able to think about, actually the talk before us, whilst it was consumer facing, it was the idea of having these agents who can advise you on things. So that's super relevant in the business domain as well. And so if you can have, APIs between businesses that work together to solve a common purpose, where you can actually pay in the moment for calling that API, using potentially tokenized commercial bank money, which is regulated pretty much the same globally, relying on zero-knowledge proofs for anonymity and confidentiality, which is hiding the amount transacted and who's doing the transaction. You start to open up a world of commerce that is entirely different to the way things work today, which can be working 24/7, and for that you need great networking. You know, Google Cloud has great networks, has our own dark fiber. You need data centers everywhere to make sure that this can continue to run all the time at scale. We know how to do scale. And so we're seeing ourselves as, you know, someone who can bring all of the AI capabilities that we already have within our platform to enable businesses to build their own capabilities with APIs that can talk in a fairly standardized way to other businesses who are exposing their APIs. You can almost think about that as API management. Whether it's a smart contract or an off-chain process, it doesn't matter. These things will coexist together. There's no reason why one would have to modernize the entire stack just to leverage the payments rail. I think some of that can go on-chain when it makes sense and we can fix forward. And indeed, that's what we see some of our customers already exploring. And so now you're in a world where you have AI agents who know your business super well, who can interface with your business counterparts, your customers and your partners very well, and start to do trade, whether that's, you know, part of trade finance or just the payment. Doesn't really matter. The point is this technology is here, it works. Now a case of gaining wider adoption and ensuring that people have the technical building blocks that they need in order to get it done.
Thanks. Bernard, you mentioned the use case about getting into a parking garage and paying that with digital currencies. Can you elaborate a little bit more about crazy use cases? Because I'm pretty sure within your labs that you have a design board with these use cases on it. But what is also needed to make these use cases a reality? When I think we heard from the technology side that Google Cloud is ready for it to facilitate the market with their technologies. EY can do all the other topics around regulation, compliancy, advisory. But what is your point of view to make this a real reality and to go into mass adoption?
It's twofold. It's first, enterprises getting ready, shifting their mind towards the more modern ways of payment and enjoying all the benefits. So it's that mindset within the treasury function to really be ready for digital currencies. I think this is a mindset, and I would want to make a call out to everyone here in the audience. Really think through, do digital currencies make sense in your business? And I think you really should get started now. You do not need to get started at scale. You do not need to do 100% digital currencies, but think about the use cases that are critical for your organization, where the notion of 24/7 instant payments, low fees, especially across borders, are critical to you. So this is one. Treasury needs to get ready. This is the call out here to the audience. The call out more to the financial ecosystem is make stablecoins accessible. So if I'm an individual or if I'm a business, it's damn hard to get a stablecoin. So what would I want to do is I want to go to my house bank, say, here are 1,000 US dollar, here are 1,000 British pounds, give me the equivalent in the stablecoin. Basically, like a movement from a bank account to a wallet. This is what I need from my bank. I don't want to go to all the exchanges and the likes and KYC myself and do due diligence on the exchange. So this is also hindering adoption. If you think about B2C use cases, just take my car example. For me as an individual, it's probably even harder to get that. I basically would open an account with a Coinbase or another favorite exchange, then get probably some ETH and convert it to USDC. So really a horrible process. Why can't I go to the ATM or to my online banking and say, hey, drop me $1,000 into my wallet? I think the financial ecosystem needs to get ready, needs to enable those modern forms of money, I guess. Technically, we are there. Google's doing great stuff. I think we are also trying to knit it into the enterprise. Compliance-wise, we are there. Treasury needs to get ready. The financial ecosystem needs to get ready. And I guess once that is in place, it will really take off for all of us.
Good. We're ending the end of the session. Maybe, Ollie, some final closing comments from your either personal view, or you can take the EY view on this topic, and maybe specifically around what Bernard tried to mention as well, the adoption and when things really will become a reality for all of us.
Yeah. So I think on the adoption side, I mean, we've shown it's doable, right? It can happen. I'm hoping that more examples like this, more things that we're seeing, will help the sort of wider industry, because I don't think we need to worry about the kind of Web3 natives, people in that space. I think what Bernard just said around the rest of the financial institution, we're seeing that movement. You know, we've been involved in a project in the UK called the Regulated Liability Network, which takes the largest banks in the UK, and they're exploring how they could use tokenized commercial bank money. So not a stable coin, but kind of an equivalent in terms of the functionality that we have here. We've seen positive moves by the regulators as well. I think the direction of travel is in the right place. I'm not saying it's going to happen overnight, but I do think it's there. And on the use case side, you know, I just think that it's not going to solve everything, right? We're not talking about everything as a nail and we've got this hammer. But there are specific nails where we do need this to address it. And there are so many sort of pain points that we face, especially, as Bernard said, where actually having this and the ability to do it will make the difference. So I think that the direction of travel is, you know, I don't see it reversing. I don't see it changing. I'd like to see it accelerate a little bit more, but I think the kind of right players in terms of public, private sector is there, especially in the UK, but also in other jurisdictions.
May I offer one thought? I think you can get going now, because even if you don't want to hold a stablecoin on your balance sheet, or you don't want to hold a digital native token on your balance sheet, you can still leverage the rails and use a prime service or something similar from a company that will just give you pounds or dollars on the other side, and nothing has to change. And so you can put one foot into the space now without changing anything, and you might even find you get an auto-reconciliation and match on that anyway. So you can get going right away.
Thank you. Final closing comments from you, Bernard.
I think nothing to add. Get started.
Get started. Well, we can get started with Q&A, because I think we have 1 or 2 minutes left. Looking to the left side, there's a mic. Any questions, please raise your hand. And if not, we did a brilliant session, giving a huge perspective on this topic. Any questions? Then final thing, please give them a big hand of applause. Thank you very much.